Welcome back to Talk Tickers, where we break down these earnings calls so you don't have to. And today we are diving deep into Roku's Q4 2024 report. And I gotta say, these numbers, they paint a pretty fascinating story.
Yeah, it's definitely a story of impressive growth. Roku, they exceeded expectations, across the board, really. And it shows just how strong their position is in this whole streaming landscape.
So before we really get into the weeds here, just give us that big picture. What's the headline? What's the takeaway here?
I think the headline is that Roku is just firing on all cylinders. Not only did they beat, their own projections, but they're also confidently forecasting continued growth into 2025. And they're seeing strong performance in both platform revenue, which is mostly advertising, and also in their device sales.
So they're making money, but what's interesting is however they're making money. What stood out to you, particularly?
Yeah, it's fascinating. Their laser focus on platform revenue, specifically free cash flow, they're really highlighting that as their North Star metric. And this signals a shift, right, towards prioritizing profitability and that long-term sustainability. And that's always a good sign for investors.
Yeah, that's a great point. It shows that they're not just chasing growth for the sake of growth.
Yeah.
They're playing the long game. So let's zero in on that platform revenue for a sec. It was up a huge 25% year over year. What's driving that?
So it's kind of a trifecta of, smart moves they're making. First, they're making their home screen more and more valuable to both users and advertisers. Think about it. That home screen is prime real estate. It's the first thing people see, right, when they turn on their Roku.
Right. So it's like they're creating a more attractive storefront, which, draws in advertisers and keeps users engaged.
Yeah.
What's the second piece of this strategy?
The second thing is they're partnering with all these third-party ad platforms, right? And that's expanding their reach and their ad inventory. So by working with other players in ad tech, they're tapping into a much wider pool of potential advertisers.
Okay, so they're casting a wider net. And what about the third part of the platform revenue strategy?
The third element, and this is where it gets really interesting, is their focus on subscription revenue. Roku is, quietly, building this powerhouse subscription business with tens of millions of subscribers, and they see, huge EE potential here.
So it's not just about showing ads, it's about being this hub for all these different subscriptions as well. Makes sense when you think about how popular those streaming services are becoming, like HBO Max, Disney Plus, all those.
Exactly. And they're not just relying on one revenue stream, they're diversifying, right? Creating multiple avenues for growth. And they're doing all this while remaining platform agnostic. So they don't really favor any particular streaming service over another.
And that's key, right? That neutrality allows them to partner with this wide range of providers and not alienate any of them. All right, so let's dig a little deeper into the advertising strategy. What are they doing that's, making them stand out from everyone else?
Well, they're not just doing those standard banner ads you see everywhere, right? They're creating these unique, high-demand ad units. So think, interactive video ads that play right on that home screen. Instead of just passively watching, you might be prompted to actually engage, which makes the whole thing more memorable.
Interesting. So they're making advertising more engaging, which is good for both the advertisers and the viewers, obviously. What other kind of ad formats are they using?
Another one is shoppable elements. They're integrating these right into their ads. Imagine watching a commercial and you can buy the thing right there, right, without leaving the Roku platform at all.
Oh, that's very clever. They're really using that immediacy of streaming to make the shopping experience just super smooth. Do they have any data to back up the success of these new ad formats?
Yeah, they do. They actually highlighted some really successful campaigns from brands like Pepsi, Neutrogena, who are already using these formats.
Okay, so they're not just playing around, they're seeing real results. That's encouraging. So we talked about subscriptions being a key part of their growth. What's their game plan there?
It's kind of a two-pronged approach. On the one hand, they're partnering with, all the premium subscription services like your HBO Max and making it super easy to sign up right through the Roku platform.
So they're kind of being that gateway to all these premium services. What about the other side of the subscription strategy?
The other side is focusing on those direct-to-consumer apps that are using Roku Pay. So that billing integration is key for keeping users around, right? You can sign up, you manage your billing all within Roku. Makes it way less likely that you'll, cancel.
Yeah, it's all about reducing friction and making the user experience, as smooth as possible. So Roku Pay is a really smart move in that regard. All right, so all this talk about growth and innovation is exciting, but let's not forget about the big, the elephant in the room, competition.
Yeah.
The streaming space is getting crowded. We got Amazon, Apple, all these major players. How's Roku holding up against those giants?
I think they're doing more than holding their own. They're actually thriving. I mean, Roku is the #1 streaming platform in the US, Canada, Mexico, and they're expanding internationally very rapidly. And they're doing it strategically, choosing partners, building their base, and then, monetizing later.
Classic land grab, right?
Yeah.
And it seems to be working for them. But what about this news with Walmart buying Vizio? That seems like it could, shake things up a little.
It's definitely something to keep an eye on, but Roku, they don't seem too worried. They actually see it as an opportunity, not a threat. They have confidence in their brand, their partnerships, and, their distribution channels.
Yeah, they're not backing down from a challenge. All right, so before we jump into part 2, let's have a little fun with our This Is Not Financial Advice segment where we just, explore some wild trade ideas.
Always a fun part of the show.
Yeah.
What outrageous but plausible idea did you cook up this time?
So what if Roku went all in on subscriptions, like all in? I'm talking creating their own bundle of, premium streaming services, Roku Super Stream, we could call it, offer a discount to users and, take a cut of the revenue.
Whoa, that's a bold move, but I can see the potential there. Imagine the power they would have if they could put together this, amazing bundle of services all at a great price.
Right. They'd be the one-stop shop for all your entertainment. And they already have the platform, the user base, even the billing with Roku Pay.
It would definitely be a huge disruption to the industry. It could completely change the power dynamics. Of course, it wouldn't be easy, They'd have tons of competition from existing bundles and would need to get, negotiate some pretty sweet deals with those streaming partners.
Yeah, sure. It'd be a gamble, but potentially huge rewards. If they could pull it off, that Roku Super Stream would be a game changer.
Definitely a scenario we're thinking about. All right, we'll leave it there for now. Join us for part 2, where we'll, keep going deeper into these Roku financials and their strategic moves. All right, so welcome back to Talk Tickers. Let's grab those Roku magnifying glasses and zoom in on their Q4 2024 financials, right? Remember that whole North Star metric? They were talking about that free cash flow. Well, they delivered. Ended the year with over $200 million in free cash flow. And they're projecting even stronger performance in 2025.
They're not just talking the talk, right?
Yeah.
Walk of the walk, too. But break it down for us. What's so important about strong free cash flow? Why should investors care about that?
Okay, so strong free cash flow gives a company options, right? Flexibility. It means they can reinvest that cash back into growth, maybe buy back some stock, issue dividends, even make some strategic acquisitions. It's a sign of a really healthy business.
So it's not just revenue growth. It's about generating cash that can fuel future growth, potentially reward those investors. All right, let's break down those revenue streams a little further. We talked about platform revenue being this, major driver. What are the key components there?
Platform revenue is mainly driven by, advertising, and Roku is absolutely killing it in that area. They're not just, passively riding this wave of streaming. They're actively shaping it, creating these unique ad units that advertisers they want them.
We touched on those innovative ad formats earlier, right? The interactive video ads, the shoppable integrations. What else are they doing to, stand out from the crowd in ad tech?
One really interesting strategy is building these showcases, and they're using these showcases to help with product discovery. So think about it like a curated shopping experience, but it's right within Roku. So you could be, browsing through this showcase featuring the newest gadgets or beauty products, and it's all integrated into that streaming experience.
Yeah, it's like they're trying to blend entertainment and shopping together.
Yeah.
Right? Make it super easy to just discover and buy stuff you're interested in. Really smart. So what about their subscription revenue? We know they're betting big on this. How's that going?
It's definitely gaining some momentum. They're becoming a major player in subscriptions, right? Focusing on those premium subscriptions like your HBO Max, but also those direct-to-consumer apps that are using Roku Pay.
And Roku Pay seems to be crucial to their subscription play.
Right.
It gives users that seamless billing experience, reduces friction, encourages signups. But what about the competitive landscape? Are they running into any challenges from other, payment platforms or subscription management services?
Oh, there are definitely other players out there, but Roku, they have a few key advantages. First, they have this huge user base and a really well-established platform. Second, Roku Pay is just so tightly integrated. It's super convenient. And
Hmm.
third, they're using all that data they have to personalize recommendations, special offers, making it much more tempting to subscribe through their platform.
Sounds like a pretty compelling proposition for both users and the providers. Okay, let's shift gears a bit and talk about international expansion. They're already the dominant streaming platform in North America. Where are they focusing their growth efforts internationally?
So they're making big moves in Latin America and the UK, and it's the same, successful formula they use in North America. Building those partnerships, growing the user base, and then, gradually monetizing.
Patient, methodical, right.
Yep.
Building a solid foundation. What are some of the challenges they face, expanding internationally?
One challenge is just navigating all the different cultural preferences and those regulatory landscapes. What works in one country, might not fly in another. So they have to be really adaptable.
Yeah, no one-size-fits-all strategy there.
Yeah.
What about competition, though, from, local streaming providers? Are they seeing any strong regional players popping up?
Of course, there's competition, but Roku, they have brand recognition, a strong platform that gives them an edge. Plus, they're partnering with local content providers to offer a more, diverse, appealing content library.
So they're adapting, right? Not just trying to import their American model. So let's talk about their device business. They're a leading provider of streaming devices, but it's a super competitive market. How are they holding up against, companies like Amazon, Google?
Honestly, they're doing great. Their streaming household base keeps growing, and they're managing to stay profitable, even with all that, intense price competition.
That's pretty impressive. How are they staying competitive on price, but, keeping those margins healthy?
They're leveraging their scale, their operational efficiency to keep costs down. They're also diversifying their product lineup, right? Offering devices at different price points to appeal to a wider range of consumers.
So they're not just competing on price, they're giving people different options, right? Meeting those different needs and budgets. What are some of the innovations we're seeing
Mm-hmm.
in their device lineup?
Always innovating, right?
Yeah.
Adding new features, improving that user experience. For example, they just launched this new line of streaming sticks with better voice control and support for higher resolution streaming.
Staying ahead of the curve, keeping those devices, cutting edge. So let's talk about their operating expenses. They've managed to, slow down that growth rate, which is good for profitability. How are they achieving this greater efficiency?
Well, they're taking a pretty multifaceted approach to cost management. They're hiring strategically in, lower cost regions, using automation to streamline processes and optimizing their cloud infrastructure for, better efficiency. They're even exploring AI to, further enhance those operations.
So they're being strategic, right? Not just slashing costs randomly. They're focusing on areas where they can, improve efficiency without sacrificing quality or innovation.
Right. They're showing they're not just obsessed with growth. They're focused on profitability and that long-term sustainability.
Now, we talked about their focus on attracting those small and medium-sized businesses, right,
Yeah.
to their ad platform. How are they making their platform more accessible, more appealing to that segment of the market?
They've launched this self-serve ads manager, and it basically empowers SMBs to, create their own ad campaigns, manage them all on Roku. It's a game changer, especially for those businesses that, traditionally haven't really had access to TV advertising.
So it's like democratizing advertising, right? Leveling the playing field,
Yeah.
giving those smaller businesses a fighting chance. But how user-friendly is this self-serve platform? Can those businesses with, limited tech expertise, can they figure it out?
Yeah, they designed it to be, intuitive, easy to use, even if you don't have a dedicated marketing team. They've got step-by-step guidance, templates, all these tools to simplify everything.
So they're providing that support, those resources. Now, let's talk about something that's been on everyone's mind lately. Tariffs and trade wars. How's Roku, navigating all this uncertainty?
Well, they've been proactive. They're diversifying their device manufacturing, globally, so they're less reliant on any one country, which means they can better handle those tariffs or any trade disruptions.
So hedging your bets, spreading out that risk, smart.
Definitely. It shows they're thinking ahead.
Now, let's touch on one of their key partnerships in advertising. Their collaboration with the Trade Desk. We've seen some news lately about the Trade Desk's performance. How does Roku view that partnership? and its, overall health.
They're not really sweating those, short-term fluctuations. They see the long-term value and are confident in the trade desk's ability to navigate, all the changes happening in ad tech.
So taking that long-term view, not getting caught up in, all the noise. Sensible.
It shows that, they're committed to building those strong, lasting relationships with those key players, right?
Okay, so we've covered a ton here. Let's step back for a second and just look at the big picture. What's your overall assessment of Roku's performance and their strategic direction?
I think they're firing on all cylinders, executing their vision really effectively, and, they're remarkably adaptable in this market that's constantly changing. They're not just keeping up, they're leading the way.
They're a company to watch, a force to be reckoned with.
All right, before we move on to part 3, where we'll, get into Roku's future and all the potential risks, let's have some more fun with our This Is Not Financial Advice segment.
Hit me with it. What other crazy ideas have you got?
Okay, imagine this. Roku decides to, leverage that massive user base, all that data they have, and create their own streaming service. But I'm not talking just another Netflix or Disney Plus Red. I'm talking like a whole new kind of streaming experience, personalized to each individual viewer.
Ooh, okay. I like where this is going. Tell me more.
So picture this. You turn on your Roku, and instead of, that generic grid of shows and movies, you get this curated selection based on your, watch history, your preferences, maybe even your mood.
Like having a personal entertainment concierge. Tailoring everything just for you, but how would they, get all the content? Would they produce their own shows and movies? It could be a mix of things. Licensing content from existing studios and networks for sure, but also investing in, original programming, like what Netflix and Amazon are doing.
That would be a bold move, but man, the payoff could be huge. I mean, they already have everything else, right? The platform, the data, the users. All they need is the content.
Exactly. And they could use, their data to find those gaps in the market, create shows and movies for, audiences that aren't being served right now. They could even use their platform to empower, like, independent filmmakers,
That would be pretty disruptive. Could shake up Hollywood.
For sure. There'd be, challenges. Building a content team, those licensing agreements, marketing against those established players.
Definitely a gamble, but high risk, high reward. If they pulled it off, it would transform Roku. They'd go from, just a platform to an entertainment powerhouse.
Definitely something to think about. Okay, join us for part 3, where we'll wrap up this Roku analysis and talk about those key takeaways for our investors. All right, welcome back to Talk Tickers. We've spent the last 2 parts really digging into Roku's Q4 2024 earnings call, and I think it's safe to say they're not just surviving, they're thriving in this, wild world of streaming.
Yeah. They're definitely a force to be reckoned with, that's for sure. But every company, even the most successful ones, they face challenges, potential risks. So let's take a look at the road ahead for Roku. What could go wrong?
Exactly. So let's start with the the competitive landscape. It's getting crowded out there. Amazon, Apple, Google, they're all fighting for dominance in the streaming world. How can Roku maintain their their edge in this kind of market?
Well, one thing that really sets them apart is their platform agnosticism. They don't really care what content you watch, right? They're happy to partner with, pretty much any streaming service out there.
Yeah.
Gives users that freedom to choose.
Yeah, that neutrality is it's a big advantage. Keeps them flexible. But what about the threat from those tech giants, right?
Yeah.
With all their resources and money.
It's a valid concern, yeah. But Roku has shown that they can compete, even against, giants like Amazon. They've built a strong brand, a loyal user base, and their platform is, robust. It keeps innovating.
They're not standing still. Always pushing the boundaries, experimenting with ads, expanding those subscription offerings, investing in the devices.
Right. And don't forget about their international growth. They're, replicating their success in new markets. They're a global player now.
So they're playing offense, not just defense. But even with all that momentum, there are still, potential risks. What are some things that could, throw them off course?
Well, one potential challenge is the rising cost of content. All these streaming services are, competing for eyeballs. They're bidding up the price of popular shows and movies. And that could squeeze Roku's margins.
Yeah.
Especially if they, decide to make their own original content.
Yeah, that's a good point. Content is king.
Right.
And it's only getting more expensive. Anything else? Any other challenges you see coming up?
Well, there's the regulatory landscape. It's always changing. Governments are looking more closely at, the tech industry, and streaming services are, definitely part of that. There could be more regulation around, data privacy and content, and that could impact how Roku does business.
Yeah, it's a moving target for sure. Anything else? Any other red flags for investors?
Keep an eye on platform fragmentation. As more and more streaming services pop up, it's harder for, users to find what they want. If Roku can't keep things simple, intuitive, they might lose viewers to the competition.
Right, got to make it easy. So we talked about the the challenges, but let's end on a high note. What are you most excited about when it comes to Roku's future?
Honestly, I'm excited to see how they keep innovating,
Yeah,
pushing those boundaries. They're not afraid to, experiment and take risks, and that's what makes them, so interesting.
they're always evolving, which is crucial in this business. All right, well that wraps up our deep dive into Roku's Q4 2024 earnings call.
Yeah, we've covered a lot of ground, from those, strong financials to their vision for the future.
And as always, folks, remember this is not financial advice. We just want to give you a better understanding of how Roku's doing.
Absolutely. And until next time, keep those tickers talking.